Hey, y'all, Zach McDonald, your real estate agent with Real Property Associates, and this is my Seattle real estate market update for August 2025. First off, I hope everyone's having a great summer so far. The housing market has been, pretty normal, I would say, so far this summer. We saw the busy spring, and we're seeing a little bit slower of a summer as far as the buyer activity, but a lot more listings coming on the market. And last month, I said things like, inventory is building up, it's slowing down, we're shifting towards a buyer's market, or what I really said was a more balanced market, right? Heading in that direction, things are selling below asking price. What we saw this month is things were stabilizing. Things have been stabilizing here recently over the past month. And in Seattle specifically, Seattle was hotter than everywhere else, or almost everywhere else, in King County and Snohomish County, which is a little farther north. Bellevue also was doing great and has had a good year, but Seattle has stood out, I would say, out of everywhere. And it makes sense to me. I mentioned last month, I think the return to work and people starting to look towards the city is a real thing again. And we'll look at that as we look at some of the data a little bit more closely. But I wanted to jump in and talk about rates, because I think rates have played a huge part in how the housing market has acted or behaved over the past few years. We've had some news recently, specifically around jobs, and we've had some conversation and news maybe around Fed rate cuts. And we're in this place where we could see the interest rates continue trending down. They have over the past few weeks. Mortgage rates been at 6.57 as of the Mortgage News Daily, their most recent survey on 8/6. Okay, that's when we looked at this. I think this trend could continue downwards. And again, we don't know what's going to happen at the next Fed meeting, if they're going to drop rates, if they're going to continue to do that the rest of the year. We have no promises. And so far this year, there's been a lot of resistance to doing that. But a lot of the other data is starting to point towards maybe that's the case. Maybe we should have a rate cut here soon. And if that's the case, I think that's going to continue to put the downward pressure on the mortgage rates. And mortgage rates, just as a reminder for everyone, not directly tied to the Fed rate, but there's a very strong correlation to the two different rates. A lot of other rates are based off of the prime rate or the Fed rate, like an auto loan or a HELOC or a securities-backed line of credit, things like that. But the mortgage rates are not tied to the Fed rate. More closely, what you should be looking at is inflation. Those numbers are the numbers that I'm more paying attention to. And those you'll see the reflection immediately. Mortgage rates are changing every day, right? So how could mortgage rates be directly connected to the Fed rate, right? The Fed rate hasn't changed here recently. Now, the mortgage rates, though, I think can play a big piece, as they have in the past, in stimulating the housing market. And our housing market has remained relatively strong over the past few years, where it certainly felt some effects of the higher rates, but other markets have been a lot more dramatically affected than Seattle. I think in our area, we've seen some ups and downs for sure, but overall, home prices have trended up and as of recently been more stable than going backwards, even with lower affordability because of the high rates. We don't have and never did have a massive flood of inventory into the market, which really would have been tough to absorb. And that's where we have those numbers like the amount of inventory, the amount of supply. When I talk about the 2.5 months, just how long does it take to absorb or for all those houses to be sold? So here we are. We've seen an increase in the amount of supply over the past few months. Again, normal for the summertime, more dramatic than over the past few years. And at the same time, this month, things started to level off and even go backwards, which would be, I guess, encouraging for somebody who's thinking about selling, because you start to lose some of that downward pressure on pricing. So again, we're going to pay really close attention to the interest rates here over the next few weeks and few months, because those could dramatically stimulate the housing market, bringing more buyers back into the fold if rates are lower. And I know many people, and I've talked with many people that have been kind of waiting it out a little bit, hoping that things get better, wanting to hear some positive news before jumping in. And at the same time, waiting until that point, just as a frame of reference, that's when everybody else is going to be jumping back in. I think a lot of us are waiting for some positive news when they jump back into the housing market or making a purchase of some stock they've been wanting to buy. And at the same time, that's maybe not the best time to be buying. It's not a bad time to do it earlier necessarily, but at the same time, you're maybe missing out on the best time to buy, which could be before. So this is me saying, hey, pay attention. We might be seeing a shift again, right? We saw what felt like a significant shift here over the past few months with things slowing down, but we may see that stop pretty abruptly in the coming months. Now, let's talk about pricing. Everybody wants to know what are houses selling for in Seattle. And last month, the median sales price was $995, and that is up 4.7% year over year. Last month, a little bit higher median sales price, over $1 million. Again, this is kind of normal changes month over month. Bellevue, on the other side of the water, $1,874,975, 3.6% up year over year. And when we look at the overall picture, both are higher than King County as a whole. If we look at a bar graph on pricing, median sales price, we're seeing Bellevue's price hasn't changed much over the past couple years. Seattle, on the other hand, has been slowly increasing over the past couple years, but neither in any dramatic way. And something that we've talked about for a while is that home prices have been relatively stable. We haven't seen home prices shooting up, and we've certainly recovered from the drop-off that we saw back when interest rates started spiking, but we haven't seen any type of massive drop-off in prices. If anything, they've recovered and are remaining stable and growing slowly, right? Really slowly, but more normal. It's more what you would expect to see in a normal housing market, that 3 to 5% range, not 10, 15, 20% a year. I don't think anybody ever thought that was sustainable. If we look at the average amount above the asking price or below the asking price, we're seeing in Seattle homes selling over asking price, just over 0.3% on average. In Bellevue, homes were selling for 98.6% of their list price last month. And that would, in both cases, be a little bit less than the past couple years. So prices have been relatively stable, but the amount of competition, multiple offers over asking price is less when we're looking at that same bar graph for the list price percentages. Now, if we transition here to days on market, we're seeing 9 days on market in Seattle, over on the other side of the water, 7 in Bellevue. We're seeing the average, again, so this is when you're factoring in some of those bigger numbers a little bit more dramatically, 20 days on market in Seattle, 24 days on market in Bellevue. And by no means are these really high numbers, but it does mean that your house isn't selling immediately when you list it. It does take some time in some cases. Now, others are selling really fast. Some are, again, seeing price reductions, selling below asking price. The amount of new listings, okay? This has been something we've been paying more attention to. I wanted to focus primarily on rates today, whereas last month we were talking a lot about new listings and supply. New listings in Seattle over the past month, 898 new listings, which when we look at that, 21.7% more than last year at the same time. Bellevue, also quite a bit higher, 47% more new listings, 172. In Seattle, we saw that those numbers are coming down, and Bellevue flattening out. It's encouraging that we're not seeing that inventory number continuing to spike or amount of new listings spiking, because the buyer demand just wasn't keeping up with it. And every summer at the beginning, you see a push in the amount of housing and supply. It usually builds. And we're already on the downward trend here in Seattle. Bellevue's pretty much even. But looking at the bar graph, it's kind of fun this month to focus on this a little too. We're seeing, if you look back a couple years ago, how dramatically the amount of housing is changing. And so there was a few year period where we were seeing very depressed number of houses coming on the market because people were not selling. And this year, the trend has really been, we're going to sell. We're selling. We know we're giving up a great rate, but we're going to be selling. And that's for many different reasons. But we're seeing that trend. More of the houses are coming on the market. And it's been that way every month for the most part. Now, closed sales in Seattle, about the same as last year, a little bit more. 588 closed sales in Seattle last month. Bellevue, we saw 106. There's a pretty dramatic difference here between Seattle and Bellevue. And every once in a while, I like to point out just how many more houses are in Seattle than Bellevue. Quite a bit bigger city. But we get to see that reflected here in the sales numbers and the supply numbers. But closed sales haven't changed a ton, about the same year over year. Slightly more than a couple years ago, but those numbers have been more stable than the amount of houses coming on the market. So I think what we're seeing here isn't more buyers coming into the market. We've seen the buyer pools remaining relatively consistent with the higher interest rates. We're not seeing a spike in that either, but we've been seeing that spike in the listing inventory. I think we may see more of a spike here in the buyers, as I mentioned earlier in the video, if the interest rates continue trending down. And we've seen interest rates touch 6 here in the recent years. And when they have, that's when the housing market started to get hot, even if it was just for a small blip. Hard to refinance and hit that when you're not sure if they're going to keep going down. Personally, I don't want to refinance with a 6.5% rate. I have a 7% rate right now, 6.99. I can't say I really like that, but it is what I have, and I'm not ready to trade that for 6.5. I would love to trade it in for something lower in the future, but I'm still holding out. Now, pending sales activity, this is also encouraging, is up. So in Seattle, the pending sales were up 27.8% year over year in Seattle and 17.6% year over year in Bellevue, and both mostly flat, slightly less than last month. Again, way fewer homes that came on the market. But you'll see if we look at this bar graph again, we had quite a bit of a uptick in the amount of pending sales for the same month in the past few years. So the buyer activity did pick up as far as action here with the pending sales. The closings are always looking back even farther. So whenever we do these updates, we're looking at data from the past month. The closed sales would be a reflection of what happened a couple months ago, right? And as we've seen in the pending sales, there is some evidence that more purchases are happening, buyers taking action in the last month than the past few. So a little bit more buyer activity, right, has been happening in the past month. We've seen fewer houses coming on the market, which is normal. And that leads us to what I would expect to be sharing, and that's that we had the amount of inventory actually going down in Seattle over the past month, not increasing. And that was the trend. Bellevue leveled out, but Seattle actually went backwards in the amount of homes available on the market. Now, we still have way more houses on the market than we had last year and a couple years ago, and the bar graph is really telling when you look at it. You can see it on the line graph too, but the bar graph really shows this pretty dramatically, I think, on the year over year reflection. But we're seeing that number is starting to dwindle a little bit. This is also reflected as we look at the months of supply or inventory monthly numbers here. And Seattle and Bellevue were both at or above the 3 months of supply number. And this bar graph, again, it's our favorite this month, is showing us that trend upwards. But again, we saw those numbers pulling back month over month. And so we're starting to, in my opinion, see that maybe things will shift a little bit as we're heading into the fall. Maybe some of that hope's already been infused into the market. But again, a lot's going to depend on rates. And something that I always like to say is the future is impossible to predict. I don't have a crystal ball. What I have is my experience. What I have is being in the market. What I have is the data. But the data can't predict the future. We can make guesses and we can do our best to see where things are headed in the housing market. But there's a lot of different things that can change what's happening. Something like COVID changed a lot, right? It changed the landscape dramatically, and the housing market just exploded everywhere in the country. I don't think anybody expected that. But even the smaller stuff's even hard to predict. But even as we're looking at this information and as we're looking at what's happening in the market, it really does feel like maybe we are going to start seeing more buyer activity, and we're going to start to see some of the amount of housing supply that's been building up. Again, nothing major, but more substantial than in the past few years. I think what we'll see is some of this opportunity and these options that buyers have right now are going to start to dwindle. And I think that some of the competition that people have been taking a break from, if you're a buyer in particular, you're going to start to see some of that coming back into the market. And if anybody has friends or remembers making purchases or sales during the more hot years here in Seattle, that means paying over asking price. That means bidding wars. That means removing contingencies. And sellers love that stuff. Buyers are not as big of a fan. So I think right now, get a more balanced market between buyers and sellers here in the city. It does seem like we may be heading towards, specifically in Seattle, right? Seattle's been a little bit more competitive here as of late than King and Snohomish County in general. Countywide, in both places, things have been more stable. We're not starting to see a big shift, but in Seattle specifically, we've been seeing a lot more competition. Some of that's being, I think, related to the returning to work in the office. And I think also maybe even sometimes the city leads on this, heading back towards a little bit more competitive housing market. Thanks so much for watching this month's Seattle real estate market update. And if you made it all the way to the end of this video, I know that you got some value out of it. So please help me get the word out, whether that's with a thumbs up on this video, a share, or even a comment if you have some thoughts or opinions about what we talked about in this video. And if you have any real estate needs, if you're thinking about buying or selling in the Seattle area or know someone that is, I'd love to be a resource.